All right, good evening, everyone. We're going to start shortly. All right, so good evening once again. This is Ajit Mishra from Religare Research, and welcome you all in the weekly webinar of Week Ahead with Religare Technical. So in this webinar, we talk about markets, what was the trend during the passing week, what all sector did well, wherein we saw the underperformance, gainers and losers from the Nifty 50 basket, and followed by the key, means what we are anticipating in the key indices, both Nifty and the banking index for the coming week, and some of the charts of stocks wherein we are seeing potential both on positive or negative side, followed by the this poll, just to get your feedback, and finally we'll end with the Q&A session. So in case if you have any question related to the webinar, you can just ask during the Q&A. So let's start with a quick disclaimer that the information that we're going to share during the webinar is for your understanding of the market, what could be the next probable move. It's not a trading or an investment recommendation. So before making any decision based on the information, please check with your financial advisors. All right, so fourth successive week of decline for both Nifty and Sensex, shed nearly 0.5%. So in continuation to what we have been seeing after testing 20,000 mark, we are gradually drifting lower with every passing week. And if you'll see on the sectoral front also, it was similar to what we saw last week, means banking, financials, metals, they were under pressure. Plus the last 2 weeks of performer, IT and pharma, they also witnessed some profit taking. At the same time, media and FMCG managed to end marginally in green to decent gains, I would say, for the media. But FMCG ended almost in the flattish note. Coming to the top 5 gainers in the Nifty 50 basket, a couple of names from the Adani Group, Adani Ports, Adani Enterprise. In the last 2 trading sessions, we have seen very strong recovery in the Adani Group of stocks. Then we have HUL, Titan and Maruti, which also did well. On the losing side, we have 3 names from the metal space, Hindalco, JSW Steel, Tata Steel. In fact, coal also falls similar to the category, and UPL, which is a consistent underperformer. So this is how the market pan out the passing week, wherein majority of the sectors were under pressure. So now what we are anticipating for the next week. So we'll start with Nifty first. So Nifty, this week, what was important that if you remember that last week, what we've shared is that 19,300, this red line is going to be the crucial support for the market. Not once, but twice, we have penetrated this zone. Initially, when we penetrated this level, this green line, this 50 EMA. So this yellow is the 20 EMA, and this is the 50 EMA moving average, exponential moving average. So which Nifty respected and witnessed a rebound. Today also we saw a similar move, but this time around we closed below 300 mark. So as of now, what we have been observing is that though the tone is negative, but we are seeing select stocks, select sectors helping the index to cap the damage during this corrective phase. I've shared this earlier also that the pace of decline is very gradual in the index, which is somehow helping the participants to maintain positive stance, especially when it comes to certain sectors, certain pockets, largely in the broader indices wherein we are still seeing resilience. But having said that, since we have crossed 20 EMA, we are touching 50 EMA, tone look negative. There's no doubt about that. And the way we have closed on Friday. So if you remember that last Friday also we had a similar close, right? That on Friday we had a bad close, so we saw the continuation. Though initial session it was more of like range bound, or somehow Nifty was trying to manage the decline, but in the final sessions, it's kind of like similar move that we had last week. So in this situation, wherein we are gradually drifting lower, and global clues, last week we discussed about that the US markets are holding strong, but now we are seeing pressure in the US markets also. So tone is likely to remain sideways to negative in the coming week as well. And below 50 EMA, which is 19 to 50, 19,100, and this zone, this red line, which is close to around 18,900. These are going to be the key support area for the Nifty in the coming week. So I hope it's clear that once we break this green line of 50 EMA, 19,100 somewhere here, that's based on the weekly chart. We have a trend line support, and then the previous breakout area, the major breakout that we had was around 18,900 level, which somehow coincides with the 100 EMA also. In case of recovery, it's going to be difficult to reclaim 20 EMA, which is around 19,500, and then this previous swing high close to 19,650. So when it comes to index, maintain sell on rise. For positional traders, any rebound towards 19,500 is going to be the opportunity to go short, considering the risk to reward ratio, which is not favorable at the current levels. But on any bounce around 19,450, 500 at least, one can look for shorting with 650 as a stop and 19,100 as a positional target. For the intraday, of course, this range varies and we are seeing volatile swing. But for the positional trader, sell on rise is something that one can continue. Now, the major culprit, banking, which has been consistently underperforming. Last week also, means in the passing week also, we saw that it ended lower. So despite the oversold position, we are not seeing a respite or any strong recovery. Though from the last 2-3 trading session, we are seeing that banking is not participating on the downside either. So which is somewhere a comforting factor, but I feel that recovery or decisiveness, it's a long way to go for banking. So this pause is something that one should look at as a kind of consolidation before we inch further lower. Considering the kind of structure that we have, means unlike Nifty, banking is already at 100 EMA. This green line is 100 EMA in banking. So anyways, we are underperforming. We have breached the major support. Now the test is going to be this zone 43,500, 43,300, which is very close to these current levels. Is because that was the area basically where we had last time had this consolidation in this range 44,500 to 43,300. So we are very closer to that mark. Since we have oversold position in some of the names and select stocks, they are still holding well. So within the banking space, it's a very interesting thing which is going on, is that earlier we used to see the private banking used to outperform and stand tall when the market used to correct, except ICICI and Axis. All the other private banking majors, either they are struggling, they are forming some distribution pattern, or they are inching lower. On the other hand, PSUs, which we usually see fizzling out under pressure, if we exclude the couple of names like SBI, where we have seen very sharp reaction, in the recent past. Other PSUs, they are holding strong, they are inching higher. So this is a very different scenario that earlier we used to see the private bank outperform, but this is the other way around this time around. So, but having said that, since the tone is negative, we are not focusing largely on buying part of the PSUs. Yes, in case if you get the opportunity, maintain stop losses, you can look for long positions. But since for any recovery, meaningful recovery in the banking index, we need participation from the private banking majors. So Axis, ICICI, they're holding strong, but Kotak, SDFC, IndusInd Bank, they all are gradually drifting lower. So without their participation, it's going to be very difficult for banking index to make any meaningful move. So 43,300 and this zone close to around 42,800 is going to be the area where we have next crucial support. In case if this profit taking extends further without any meaningful recovery. And in case of rebound, 44,500, which was earlier as a support, would act as resistance, and then 45,000 mark. So this zone, 44,500 to 45,000, would be the area of resistance for the banking index. So for banking index also, we feel that it's a sell on rise, but it's a sell on rise, not at the current level, because it looks slightly oversold, trading closer to the key support areas. But there's a possibility that we might see a rebound toward 44,200, 300 before any further decline. Now on the stock specific front, though the IT index was down this week, of late some of the IT majors like Infosys, TCS, they are also witnessing profit taking. One stock which has been consistently outperforming in the large cap IT basket is HCL Tech. We have discussed this stock multiple times during this webinar, but I guess in a market like this, wherein we are not seeing strength when it comes to the index majors or the index itself, it's very important to look for stocks which are consistently outperforming the market and their respective index as well. So HCL Tech is one such name which one can look for accumulation. So this week itself also you can see that it's a weekly graph. It ended almost on the flat note while the IT index was down. And another important aspect is that it's been consistently holding this rising trend line and now trading closer to the previous swing highs. There could be a consolidation for a week or two, followed by the next leg of up move, which could help the stock to inch toward 1250, 1275 levels. So this is one such stock that one can look for accumulation in a current market correction. Apart from this correction which we are seeing in the index, the broader markets are doing exceptionally well. So means both mid cap and small cap, they are holding above the short-term averages. In fact, for most of the days, we are seeing a positive to flat closing when the markets are inching lower. And today, we had a similar day that the mid-cap index ended almost flat, maybe marginally cut. So we can still selectively look for buying candidates, provided we are seeing price action along with the volume. So KPR Mill is one such stock which hardly retraced from its record high. So this area was the record high, close to around 750. It retraced marginally to around 500 levels, which coincides with the 100 EMA on the weekly chart. And then it gradually is higher after forming this reversal pattern. And after this marginal pause around the 20 EMA, it has inched higher with noticeable surge in volume. You can see the kind of surge in volume that we are seeing on breakout. So such stock which outperform, as I've said about HCL Tech also, should be the candidates where one can look for accumulation while the trend is corrective. Means while the Nifty or the other index which they belongs to are witnessing profit taking, you can accumulate the quality stock if the preference is on the buying side. So KPR mill, apart from HCL, is something that one can look to accumulate. Lastly on the list, last week we discussed about IGL being a weak candidate. This time around, it's Delta Corp. So Delta Corp, earlier we had this stock wherein we were seeing a consistent trend, but after this decline, from the record highs close from 330 to this 160, the stock has been struggling. Means we have had phases of recovery and then decline, but this decline and the failure to reclaim this 210 or this averages on the weekly chart. This clearly shows that bears are under control. Means there's kind of a distribution that we are seeing in the stock. So there's a possibility that since we are trading in a channel. So this two trend line shows a channel. We are trading closer to the lower band of the same. In case if it breaks, means a level close to around, let's say 175, 176, there could be a sharp reaction, a next sharp reaction in Delta Corp. So in case if you are holding longs, at least you should maintain stop at 170 to be, or on a safer side. Means at times we see bad ticks happening in cash segment, but avoid going long. And in case if it recovers, please utilize recovery to exit, because we have multiple hurdles to cross around 190, 200 levels. So this is one such stock which one can look at for shorting opportunity. And in case if you have a long position, you can look for exiting as well. So yeah, this is all from the presentation part. Now we'll do a quick poll and then we'll start with the Q&A. So please fill in your feedback. And then we can start with the Q&A. Those who are done with the feedback, they can start posting their question using that Q&A tab. And please avoid any stock specific question. Anything related to the webinar, we are happy to answer. Anything related to any particular sector, let's say in a broader term, we are happy to answer. All right, so let's start with Q&A now. All right. Okay, so we have first question from Mr. Ramalingeswara on which sectors we are expecting positivity next week. See, any sector I doubt is not witnessing profit taking or decline. So as of now, like we had till last week, IT and pharma, which were holding strong, but this week we saw some profit taking in the IT and pharma space as well. So instead of maintaining sector specific report, I would rather suggest you to maintain stock specific approach, and wherein yes, the preference should be given to the defensive, considering the kind of volatility that we are seeing during the day. So when we call defensive, like select stock in the FMCG space, select stock from the pharma space, IT space. They are better candidates because we usually see less volatility in these names. Though it's not true, especially during the earnings and some special occasion. But largely, yes, we see these sectors witnessing less volatile swings. At the same time, as we were discussing, though the banking index is underperforming, select PSU stocks, they are holding well, they are inching higher. So just to name a few, like JNK Bank in India, Indian Bank, Federal Bank is holding very strong. So these are some of the names. Basically, despite being a weak sector, we are seeing certain names holding well. But at the same time, I would recommend maintaining a few shorts also. So it's not that though the decline is gradual and some meaningful or a healthy profit taking, but in stocks we usually get carried away, and in case if you're not maintaining stop losses, it becomes very difficult to exit once the loss increases beyond the capacity. So for that, I would recommend maintaining few shorts so that your positions are hedged, and do maintain shorts, stops in the existing position also, despite the gradual decline that we are seeing in the market. Because you never know that one fine day we see that the Nifty is trading flat thanks to Reliance, which is holding strong. The other stocks are bleeding. So apart from positive, do maintain few shorts also. So Mr. Devang have asked about like one stock. I'll talk about that sector, Mr. Devang, so that it helps the larger audience. So metal as a sector. So metal as a sector, in fact, also was holding very strong, in the recent week. In fact, we had breakouts in some of the big names. So JSW, Jindal Steel, those who are regular to this webinar must have heard this name multiple times. Then we had Tata Steel, National Aluminium, SAIL, they are all doing well. But now during the corrective phase, it differentiates the consistent performer from the underperformers. So though we are seeing Jindal Steel, JSW Steel, Tata Steel also witnessing profit taking, but say National Aluminium, the decline is very severe. And same hold true for VDL also, wherein we have seen very sharp decline. There were other reasons also, but now the stock is down and out. So I feel that in a market like this, wherein the tone looks negative for the index, the stocks which are underperforming, if you remember that we were discussing about stocks which are outperforming the market to look for accumulation during this corrective phase, the stocks which are underperforming the market during the decline, please avoid such stock. Please avoid adding to those names in case if you're holding loss-making position. Maintain stop losses. This is the only way that you can save yourself, your capital, and you can give next chance for any other position to enter and witness some recovery. So I hope it answers your query, Mr. Dave. Okay, next question on liquor sector from Deepak Kumar. So this pack is still holding strong, I would say, because we are not seeing any major reaction, but it's more of like consolidation phase. It's a healthy consolidation, especially I benchmark this sector with McDowell's, which is United Spirit, and which is firmly holding strong around the recent highs and consolidating in a range. So I feel it's an opportunity to accumulate names like McDowell's specifically, because it's a healthy consolidation. Means after a very strong surge, it's narrow range that is currently hovering in. So any 5%, 7% decline from the current level, one can look for start adding or accumulating this stock. Okay, so this is interesting question, though it's fundamental in nature. But the question is that Mr. Navneet Malik was that stocks or companies which have land bank, they are inching higher, and they're mostly you'll find yes, you will see all the businesses investing into that part, but PSUs largely have those land banks plus some of the private players also. So as we hear some kind of redevelopment related news or something like that, which triggers. But is this sufficient enough to look for a long trade or invest? I seriously doubt. So these things are temporary in nature, and until unless we have a strong backing, from the price action plus volumes, and you are very strict with the stop losses, please avoid such stocks wherein we are seeing short-term fancy. So this interesting question on Reliance Geo Financial. So let this talk list Mr. Kumar, and then we may see. But as the sector means NBFC as a sector, mostly stocks are largely trading in tandem with what we are seeing in the banking space. So we are seeing consistent profit taking in the top names, and it's a healthy consolidation or healthy profit taking, I would say. Okay, so there's again Mr. Ramalingeswara on that this auspicious days have started in Telangana. So any stock from the jewelry sector? So jewelry sector, yes. Interestingly, we had a very strong surge in the jewelry related stocks, led by Kalyan. And in fact, the related business now, the other jewelry makers are also witnessing decent traction, like TBJ, which is Tribhuvan Das Jhaveri and all. Related sector like Muthoot, Manappuram, they have also witnessed very strong traction. So fresh buying, I feel that TBJ offers the opportunity because Kalyan have already witnessed a very strong move. But I still, reiterate my view that in case if you are trading these stocks which are, gaining traction, fancy, off late, do maintain stop losses. Yes, Titan, I forgot to name that this stock which we have discussed last week also during the webinar itself also looks very strong within this space. Okay, this is a big and elaborated question from Mr. Rajesh Kumar on that the mid cap and small cap are already at the record highs, and there is a possibility of profit taking can come. On the other hand, dollar has reached 83. Can we see the market is uncertain zone, considering the fact there are negative indications from the global market and markets getting support in select sector at the same time, which is limiting the downside? So I fail to understand. Mr. Kumar, what is your question? Because it somehow looks like that you've shared your insights. So I can you please rephrase your question so that I can answer. Okay, so just to as per my understanding, that uncertain zone, I won't say that's an uncertain zone. Yes, it's a mixed trend that we are seeing, wherein the broader market is not aligned with the benchmark. Means Nifty is doing something else, the broader market still we are getting a buying opportunity, and it's a normal because after 4 or 5 months of surge, it's not necessary that all the stock witnesses correction on a similar manner which we usually see when the markets are in the declining phase. So as of now, we are seeing grinding, gradual, and as I just named, like stock like Reliance, some of the IT majors they were holding till last week. So it's kind of like a mixed trend that we are seeing, wherein the benchmark is gradually looking lower, but stock specific we are still getting opportunities in the long side. So I feel that as long as we are not merging these two to make a trading decision, that you should not look at Nifty in case if you have any particular stock which is showing resilience for buy position. So it's okay to look for buying, provided that you have a very strict and logical stop loss in place. See, I've requested not to post any stock specific query. So there's a query on an IT company. So IT is a sector that we have already discussed. It's normal profit taking that we are seeing. It's comparatively okay. IT, pharma, FMCG, we've seen decent, first FMCG specifically after 4-5 weeks of decline. We can see that these names are likely to witness recovery. But within the IT majors, we like HCL Tech. All right. So yeah, with this, we have answered all the queries. So thank you everyone for participating. And next week, same time, we'll connect again. Thank you.